Welcome to VCs Off the Record. This is Real Talk with Real Investors. Your host, Gayle Jennings-O'Byrne, CEO of Wocstar Capital and co-founder of the Wocstar Fund, has spent 30 years in finance. And I'm here too. I'm Victoria Bird. I'm the Chief Content Officer and Creative Director of Wocstar Media. And I've spent 30 years in media. We champion female entrepreneurs, we champion diverse teams, and we're both passionate about stories that change old narratives. We're looking to inform you, inspire you, and help you get your bag and your dreams. Today, we're talking to somebody when I was looking at who he was and that he started, decades ago as a Dominican man in the VC world, in the finance world. I was so impressed with that. I was so impressed with how he grew through the years in that field. It's no small feat. It's no small feat when anybody does something and becomes successful. But I thought, wow, he's really interesting. So, I'm excited. Tell us all about our guest.
Yeah, and you know what? I love that you pointed that out. So we're going to be meeting with a gentleman named Benny Lorenzo. He was chairman and CEO at Kaufman Brothers. He had this great career at IBM, AT&T, on Wall Street. He, and I would call like a childhood friend, started a hedge fund. Amazing success and returns. You'll find out he's a winner. And then he started a VC firm. And he has just been a gentleman. He's been of grace and gratitude, and he's a winner. And so, I'm so excited because I want us to see winners in all shapes, sizes, colors, backgrounds, and yet still be of grace and class.
Yeah, and I think what's important, what I'm going to be listening for is, doing it now. If somebody were to tell me, we meet a lot of VCs doing this show, and so many of them are young in their 30s or their 40s, and they've been able to go down this road at a different time. And to think about when he started, it was, when you're talking about knocking down the door was far more shut.
That's right.
Right?
That's right.
And
that's right.
more bolts and locks.
That's right. And listen, Dominicans, every underrepresented community is still underrepresented in finance and particularly in venture capital. And so to know the world in which he came in doing this is astounding and inspiring in itself. I mean, if I'm really honest about it, I came in a few years before George Floyd. So there was some, winds and tides changing to DEI, diversity, equity, and inclusion. I came in at a time right before that was, mainstream. And then a lot of funds came on the scene when diversity, equity, and inclusion were mainstream, if we're really honest. Benny came at a time when he just saw an area for investing and knew there was going to be some good investments to be made. It's really beautiful. You're going to learn more about it. You're going to hear more about it.
Okay, let's take a break. This episode of VCs Off the Record is brought to you by Wocstar Ghetto Film School Entrepreneurial Academy.
Hey, Wockstars. We are back with my guest, Benny Lorenzo. I am so excited that you're here for many reasons. Your career journey, Aspira Capital, you as a Venture Access Alliance member, so many things I want us to talk about.
Okay.
But I want to start from your origin story. And I think there's a fabulous woman that may have been a real influence in your life.
Absolutely.
Will you tell us a little bit about your mother? Because I think it's a big part of who you are today.
Well, as I mentioned earlier, my mother was born in the Dominican Republic. She was a seamstress. She had very little education, and she had the vision to move from the Dominican Republic for economic reasons to New York City. And she did it very early before the Dominican immigration really started.
Okay.
So she was early in her vision. My father was a taxi driver, and they didn't stay married very long. She came to New York City and sent for me 2 years later. I wasn't going to school while she was away, so I missed 2 years of schooling.
Yeah.
And then when I got here, she was very focused on making sure that that I got a good education. So she was the architect of my life. She was always after me to have good grades, to go to school, not to loiter in the streets. So I grew up in Washington Heights, on 161st Street,
Ah, yeah.
183rd Street,
I know.
in those
I know
areas.
those areas, yeah.
And when I was growing up there, it was very dangerous. In fact, in the
It's a different time for sure.
very different times. They had riots in the 1990s. It was very, very difficult. And she again had the vision of moving us from there to Fort Lee, New Jersey.
Wow.
And
think about that. I mean, the independence to leave a community, right? And then the independence to want to be a homeowner and be a woman and be a homeowner in those times. Like, where's she getting a loan for that? That's amazing.
She was always a very entrepreneurial woman. She would be doing all kinds of things, buying and selling, doing things. She always told me that the way to really get ahead was to be an entrepreneur, don't be an employee. And she instilled that in me from a very early age.
Wow.
So she was fundamental in terms of my journey.
That's amazing. Well, we have a lot of entrepreneurs that need to thank her because she's, raised and molded you, and now you're going on to help other entrepreneurs. You called it entrepreneur, but back in the day, we just said she probably had a lot of hustle.
She did.
She had a lot of hustle. I love it. Hustle and independence.
She did. She had all kinds of things. In fact, she had a what they called a numbers business back then.
Yeah, running numbers.
Running numbers and doing everything that she could to make my life easier and to make her life. And it was a dynamic woman in my life. I went to Catholic school. I went to an elementary school in Kearney, New Jersey. And there, a key person in my life turned out to be a woman, a nun called Sister Mildred. And Sister Mildred was a nun with the Palatine Order.
Oh, yeah.
And I was there full time. I slept there. I was boarding there for 3 years, from 6th to the 8th grade. And she noticed that I was very interested in the news. And she would stay up with me and explain to me what the Huntley-Brinkley news report was about and what were they saying and what did it mean and all of. And I was in the 6th, 7th, and 8th grade. And she was an Italian nun. She took the time to really do that. And I'm forever grateful. She has, of course, passed away, but she made a big difference in my life.
Wow. I love that you shared that. And it actually, it kind of comes into my next question, because you've had some pretty remarkable roles, right? Chairman, CEO at Kaufman Brothers, your time at IBM and AT&T and Aspira Capital that we're going to get into. But I got to believe along the way, there were not only mentors, but there was probably champions that championed for you. What did that look like? What do champions do versus mentors, and how they show up in your life?
Well, mentors are advisors. They give you advice. They try to lead you in the right direction. But champions are people that pull you up, that actually use some of their political power, some of their economic power sometimes to pull you up. An example of that, sort of accelerating the story, when I worked for IBM, there was an executive vice president of one of their divisions that took a liking to me and pulled me up. He took me and made me his executive assistant, which meant that I got a lot of visibility, exposure to executives. They knew who I was. Yeah. They knew about my work, and he gave me credit for it, which was key.
Wow.
And that's a champion.
Yeah. Oh, I love that you told that story. So I think for all our listeners and viewers, we got to think about champions versus mentors, because they serve different roles.
Right.
And you don't get to chairman and CEO of somewhere like Kaufman Brothers without those champions. I gotta believe.
Exactly. And something like that, that was with IBM. And then when I came to Wall Street in 1987, I came in as an equity analyst in the technology, media, telecommunications area with a company called Rothschild. And there I was very early in the technology scene, and there was another champion there. There was another managing director there that saw my potential, but I wasn't a good power writer. And he said, here you can have great ideas, but you have to sell them and you have to write fast. When you go to a conference, you can't wait until the next day. You have to write the summary, what the action plan is, and what should we tell our trading desk. You're not doing that. So you need to do that. Here's how to do it. And that was key for me to learn that very early. And somebody that then, again, it's somebody that gave me credit. He said, he's doing it, and he's valuable to us. So that was good.
I love that. I love that you keep coming back to this word credit, because that's so powerful. And it speaks volumes on the person too, that they are so comfortable in themselves.
Yes.
And they're not, that they don't have to grab credit for everything.
Exactly. And that's so key. That's a very good point, because when that executive or that person is not confident and is really looking to buttress their own position, they will not give you credit.
That's right.
They will take it to themselves and put you aside.
That's right.
That's not a champion or even a friend.
Yeah, that's exactly right. That's right. And so then so the early days, your mother with her hustle and her entrepreneurial spirit, but you went corporate, you went Wall Street. When did you flip back to the entrepreneurial? Because you were involved with the angel groups.
Right. Well,
when did that
I'll just
switch?
give you a very quick summary.
Yeah.
When
please.
I graduated from the Harvard Business School, instead of coming to Wall Street, I went to IBM. And I wanted an operating role. And IBM was like my boot camp. IBM in those times, they spent a lot of money developing their managers. And
their management training programs
training programs incredible.
You go
very,
there just
very
for
good.
that.
Exactly.
Yeah.
So that's what I wanted. So I went through that and received that training. And ultimately, I ended up being a product manager in workstation products, which gave me profit and loss responsibility from design, manufacturing, execution, pricing, etc. And when I did all of that, I really had learned a lot. And I stayed at IBM several years. But then I figured out that I wasn't going to be president of IBM, that I needed to move on.
You know what? I love you, Benny. It wasn't like I wasn't going to crack the glass ceiling. Wasn't that there wasn't career advancement for me. You said president.
Right.
If I'm not president, I don't need to be here.
I don't need to be here if I'm not going to be the top guy.
I love it.
So
I love it.
I said, well, what?
Big or go home.
That's right. So I said, well, where do I want to be? And there was a catharsis in my life, because there I had to define myself and decide, well, who am I? What do you want to do? I was always a person focused on the community and focusing on helping and all of that. But then I said, I really would like to make money. And what is the best place to make money? And that is Wall Street. And I said, I am a capitalist. But in the United States, I would really be more like a social democrat, because I am very much, very liberal in terms of social issues, but very conservative in terms of fiscal issues. But that doesn't exist here. So I went into Wall Street, and that was very, very important to me. So I stayed there for about 5 years. I ultimately ended up going to California, worked in San Francisco, got a very good training down Sand Hill Road with a venture capitalist, learned about what venture capital was all about, and then partnered with a friend of mine we've been friends since I was 17, over a long time, 50 years.
Wow.
And this guy graduated from Cornell University, which is where Cornell Engineering, which is where I graduated from, and he had started an embryonic hedge fund in Greenwich, Connecticut. So he said,
You were in all the hot spots.
yeah, I mean, I was
Sand
very
Hill,
fortunate.
Greenwich.
Very fortunate.
Yeah.
And there were very few people that looked like me in those circles. So
And unfortunately, it hasn't changed that much. If we're
no, it
really
hasn't.
honest.
Yeah, amazingly enough, in decades, we still have, the capital is not flowing in that direction.
Yeah, we're gonna talk about that. We're gonna talk about that.
So so I made the change into fund management with this individual who has started this hedge fund. He needed me to come in with him, and he offered me to be his partner, but he couldn't pay me anything, no salary. He just said we can negotiate an equity. I could provide, and I always felt that I always valued having a percentage of the action rather than a W-2 earning. I don't like W-2 earnings in terms of really building wealth.
Listen, I like profits more than paychecks.
Yeah, exactly. So we did that and started the hedge fund, and I was there with him. We built it up. When I left, we were managing over $350 million, and did very well during that period of time in the early 90s. I then started Aspira Capital in 1996 with his support, and he and I are very, very close still. And this person has been another one of those champions in my life.
I love this. The topic was building and scaling. Maybe we need to change it to champions because it's so present in all of the places you've been on your journey.
Well, it's very important because they're hard to find. You could find mentors. We do a lot of mentoring, but to find a champion, it's hard because that person has to put themselves out. They have to raise you up. They have to spend the time and the energy and the political capital.
Yeah, and that's their personal capital.
That's right, their personal capital.
That's a lot different for sure. Tell us about Aspira, the early days, because that couldn't have been easy. Like you said, there weren't people that looked like you or I in vast numbers in any way.
Right.
In the space then.
Well, I was fortunate because we had that run with the hedge fund, and my partner continued it, and he grew it to $2 billion. I left at $350 million, and I was still a limited partner with him, but I was not a general partner. So at that point, Aspira, I had made enough money in the hedge fund business that I was able to self-fund myself to start Aspira. And that's the way I did it. It was a very small organization. You really don't need that many people to do it. I then started it in Fort Lee, New Jersey at that time. Spent 10 years building it up, and we did very well. We ended up making a number of investments. One of them was investing in a financial technology company called Payoneer. And we invested in it. We were one of the initial investors in that company at a very low valuation, maybe around $7.5 million.
Oh, yeah.
The company then went public at $3 billion. In 2021, we own quite a few shares of that. And that's really all you need for a lifetime, to have one unicorn.
Yeah.
And that helped us tremendously.
I mean, that paid the fund back.
That paid the fund back many, many times over.
Yeah.
But we had to hold the stock for 15 years.
Ah.
So you have to be a long-term investor.
Yeah.
In my story, it's always a story of looking at the long term versus the short term. And in order to do that, we had to live under our means because you never knew what would happen in our lives. So we really always saved. We always protected ourselves by having a rainy day fund. I was very fortunate when I married my former wife. Now we were married 31 years. She was very supportive. And
need that,
this
yeah.
woman was spectacular. She's still one of my best friends.
Yeah, you need that. You need
You
allies.
need that support from your spouse or significant other
Yeah.
to really,
Yeah.
make it.
That's right. You need the support. And then you also need someone you can share the celebrations
Yes.
with.
Yes, you need
Right,
to share
like-
the celebration, and you need to share the tears.
That's right,
sometimes,
exactly.
too.
The tears as well, for sure, for sure. And I love that as you're talking, it just reminds me that there's no overnight sensations.
No.
There's really not. I mean, the way the news cycle is, we sort of hear someone when they're at their high, right? But we never see all those dark days, those years before, right? We just see that they hit the, top of the billboard, or they won an Oscar for that movie that we all just saw last week or something, but we don't see the journey. So I love that you're showing that in not only your own journey, but then the journey of the entrepreneurs that you support as well.
Exactly, yes.
So where's the Aspira now? Like, is it fun?
Well, here's where Aspira is now.
Yeah.
We were very successful. So in 2021, we wanted to give something back to the community. We had made enough money, and we wanted to start a fund and raise $25-50 million for this fund that would focus on technology, fintech, specifically software, early stage investing, seed, Series A, and really focus on female and underrepresented founders, Black and brown people, because we thought that there is a lot of talent there, but a lack of opportunity. So we tried to raise money and we failed. We couldn't raise money. It was a very bad environment at the end of, this was 2020, late 2021. 2021, everything peaked.
Yeah.
But at the end, in the fourth quarter, when we started, it was tough. 2022, the market was down big time. So it was very hard to raise money. So what we said was...
There was a lot of headlines.
A lot of headlines, all kinds of stuff.
Not a lot of capital flowing.
Exactly. So what we did was we said, okay, let's do a proof of concept and start a fund and just put 7 figures of our own money into it to show that you could actually make money by doing good, by focusing on these types of founders. And we went through that, and we reviewed close to over 900 companies in that period of time, and selected 9 that we invested in.
You did the work.
We did the work. There's no way around it to do, you have to do the work. So about 1% of them we actually invested in. And it turns out that one of those companies is another unicorn, $1 billion company in 3 years. It's unbelievable. And it's a company
Fabulous. I love winners. You're a winner. I'm loving this.
So that happened, and we then, in June of this year, just last, a little bit over a month ago, we shut that down. We said, okay, that fund, that proof of concept is very, very successful, and it's going to make a lot of money. So now we're raising our institutional fund, and we're pointing at that to all these institutions, all these people that said no or wait. They usually don't tell you no right away. They just say, okay, show me the next quarter and show me the next quarter. So we're doing that. So we're going back now and saying, look, we have a great track record as a hedge fund. We did that. Our track record as a fund was 28 years. 23 of them were up and 5 were down, and 22% return per year in that hedge fund. But the people that we were going after for the venture capital said, well, that doesn't count. That doesn't count because that's not venture capital. It's a hedge fund.
Yeah.
So
I feel like it's like Charlie Brown, right? And the football keeps getting moved, right?
You just said, well, but we've been doing this. We've been investing in private equities and pipes and so forth for years.
Right, I remember pipes. I remember having a
Pipes,
lot of
remember
pipes.
that?
Yeah.
We've been doing that. That's a private investment. We've been doing that, but that didn't count. So we said, okay, that's when we said, let's do a proof of concept. We're going to do a venture capital fund, only venture capital, only where we're telling you to do, and let's see how that works. Well, that one was the one that had another unicorn. So now they're saying, well, yeah, it looks like it's working. But weren't you just lucky doing that? I mean,
See, they pulled the football again.
And
They
it goes
pulled
like
the
that.
football
And I
again.
just said, my goodness, what are we going to have to do? We've been through up cycles, down cycles, all kinds of cycles. And we're still here and we're still successful.
Yeah. Well, listen, you keep winning, right? Like,
Yeah. And that's what you have to do.
people love winners. You
Yes.
keep showing success.
Yes.
Let the success
And you
speak
never
for
give up.
itself.
You just don't give up. Just keep going.
That's right. That's right. All right. So the investors are going to come. I know it. The LPs are going to come. The right LPs,
Yes,
right?
the
You don't
right
need to take.
LPs.
You don't need to cash
Yes.
every check. You cash
Yes.
the right checks. So what are you guys investing in? Because part of
Okay.
what we wanted to do was make sure, as a Venture Access Alliance member, that we showcase you so that founders know how to find you
Okay.
and learn about where capital is for them. So what are you going to look to invest in with this new fund?
What we invest in is fintech, financial technology, software, particularly software as a service, which generates a recurring subscription business, and e-commerce, and a little bit of a health, wellness, healthcare.
Gotcha.
So that's what we invest in. Those are the areas that we invest in.
Okay. Are you looking across the country?
Yes, we're looking. Our mandate is 80% in the U.S. and 20% in Latin America. So that's
okay.
That's what we do.
I was listening for that. Okay.
So that's our mandate.
Thank
so
you.
We don't invest in Europe. We don't invest in Africa. We don't invest in Asia. We have to be focused.
Listen, you go where you know.
Yes.
This is what you know.
That's what we know, and that's where our relationships are and our partnerships are. So that's the area that we're doing. And we also further focus ourselves in early stage, which is seed and Series A. Now, in doing that and saying that, we have to define what is seed and what is Series A, because different people have different definitions.
Yeah.
So, for example, some folks are pre-seed, what is called pre-seed. And pre-seed, typically you don't have any revenues.
That's right.
You just you're working, you're trying to get yourself funded to develop a minimum viable product, and you're trying to put your team together and so forth.
That's right.
We've done that in the past, but it's too risky for us. And we're too small to be able to do that and take that risk of failure. So we focused on seed. Now, what is seed? Seed is when you have your team, or not all of it, but the core team, you have that. You already have some traction, okay?
Yeah.
There is some,
Yeah, I
the
like how you're defining
emerging
it.
product market fit is there. It may not be proven, but it's there. And we can help you develop your go-to-market strategy. We can help you develop your logistics strategy. We can help you develop your scaling strategy. But the most important thing that we can help you is with money. Money, in terms of the kinds of funding that we do a lot of due diligence because we're investing in the team, the management team.
right.
So we really ask a lot of questions about the motivation of the management team. How did you come together? Do you have a co-founder that complements your weaknesses? And that co-founder can really help you.
Is there one thing that sticks out in your mind that people should walk away with when they think about building and getting to scale that you've seen that has made
Yes.
some successful versus others?
Very, in terms of answering that question, you have to start at the ideation stage. When you're ideating, thinking about what is it that we're going to offer in terms of a product or a service, what is it? And in that stage, you have to address a pain point that exists in the marketplace. Customers may not know it, but you know it. And how do you know it? Because you have done surveys. You have talked to a lot of different users to find out, if your thesis is correct. So you do a lot of this work in order to substantiate your solution. So that's the first thing. So you have to do that. You have to do your homework, the hard work. Then when
people.
you have to do that. And then when you define the product and you start actually letting people know what you're doing and so forth, you have to get some positive feedback in terms of that. You start seeing that as you get to that point, we then start talking about, okay, how do you scale this particular, let's talk about a product, we'll leave a service for a minute. In terms of a product, you have to have a product team, whether it's developers, whether it's engineers, whatever it is.
Biz dev.
You have to have those people and a tech stack. So you have to talk about your tech stack and define it and be comfortable. One of the members, your chief technology officer, somebody in your team has to be comfortable saying that, and what differentiates you, what makes you different, and why should people buy your solution versus the competition or doing nothing?
Yeah. And I always am amazed that that's that, and how are you going to defend when you do get market share? Seem to be two areas that people get really stumped on when we.
Well, they do, because when you're trying to start the company, there's so many things going on. Usually, you're trying to do all of the things that I said and defining the product, the service, and all of that, talking to your customers, but you need money. You need capital. How do you sustain yourself since you're working in this startup, not getting paid usually, or being paid very little? How do you manage all of that, and you're trying to raise money at the same time, which takes time away from scaling the company?
That's a job in itself.
Exactly.
So to that point about how do you get capital, how do people get capital from you? What's the best way to stay in touch with you?
The best way to do it is, we have our website, which is www.aspiracap.com. You go in there and you see what we do, and you can contact us. You can contact me, Benny, at aspiracap.com. It tells you in the website to do that. But you have to do your homework first to make sure that we fit each other.
Yeah, do the work. I think that's what we're going to call this episode. Do the work.
You have to do the work.
Do the work. You did the work. I'm doing the work.
Yes.
We all got to do the work.
Exactly. And the way that we invest is, okay, we have their first meeting. In fact, I had a meeting last night with someone that had an idea, and they had their app and everything else. And, I was saying, well, how did you find this? Well, we went to your website. We heard about you. And okay, and what stage of development are you? And they told me, well, our product doesn't come out until November of this year. And I said, well, you're too early for us. You have to have the product out. What we do is we do a lot of due diligence. There's a lot of questions that trip, particularly women and people of color, not making the screen, getting screened out. Because there's some things, it's a checklist that you have to be able to check that list. And if you do that properly, you will at least get a hearing. It doesn't mean that you're going to be successful, but you get in the door. You get your foot in the door.
Yeah.
And you have to know what that checklist is. We help you with that.
Yeah. And I love that you said that, because you really, truly do have to do that homework to know if it's a fit.
Yes.
Right. There is a lot of money out there. There are a lot of firms, even just in the Venture Access Alliance, right? Yes. There's 100+ members, but not all 100+ are the ones that should invest in you or are going to invest in you. So there's a homework period. So I'm glad that you're on this podcast, because this is part of us helping folks with that homework. So they're getting to hear firsthand from you what it is you do and don't invest in. So
absolutely.
Benny, thank you so much for being on VCs Off the Record. This has been an honor and a joy.
Thank you so much for having me. Appreciate it.
Yeah.
This episode of VCs Off the Record is brought to you by Wocstar Ghetto Film School Entrepreneurial Academy. So when we were talking about doing the show, we said the theme was going to be building your own, right? And
because he did.
Because he built his own, right? In a time when there was no lumber, right? But I took notes because I was so fascinated by him and his story. And I think we have 4 other options for maybe. So we have building your own.
Build your own is a good title.
We have hustle.
Hustle.
Because he hustled.
And he got it from his mother, which I love.
Right. Well, then that leads to champion.
Champion.
Right. All the people that helped pull him up.
Yeah.
Right?
Or champion versus mentor, because they're different.
Facts.
Don't confuse the two.
And I lost the third one. A fourth one.
Do the work, people.
Do the work.
I
Do
love
the
that.
work.
Do the work.
I say champion.
Do the work.
We need a tiebreaker.
Well, can we have
Jamie?
or a subtitle? Am I such the compromiser? This is the diplomat. Oh my God,
Jamie's our technical master of all things. So I'm going to get his input will be the title. You'll see.
He'll be the tiebreaker.
He'll be the tiebreaker.
There we go.
And
do the work, Jamie.
No.
But listen, in all seriousness,
Yeah.
the other thing that came across loud and clear for me and was my also big takeaway was there is no overnight success.
Yeah.
And I get that that's what we showcase.
Yeah, because I was going to say that's the story we hear the most.
We showcase it when
right,
people.
I was like, is that true?
Yeah. Yes. We show people what they're at the top of the mountain.
Yeah.
What we don't see
is base camp.
Right. Exactly.
I love an Everest reference. Yeah.
Right.
I loved the story about his mom. First of all, his mother.
Fabulous. She's a Wocstar, by the way. We should give facts.
Okay. And just the idea that she was like, I'm leaving, I'm going to America, and I'm figuring it out. Right? That she instilled entrepreneurship in him is amazing.
Dude, she ran numbers.
Dude,
you know how badass you gotta be?
You gotta be pretty BA.
I mean,
that's an entrepreneur.
Hello.
Okay, hello. And
and that's a cash business.
That is no joke.
Mama walking around with other people's cash.
No joke. But just like her hustle, her, and instilling that in him, right, was one of the, and also when he said, so I wasn't going to be the president of IBM, so I left. I was like, I was like, yes.
Who
yes,
does
sir.
that?
Yeah. But that's instilling in him such confidence, right? Such, what's the word? Self-worth and self-esteem.
Knowing thy worth.
Right. And like, and when he said, he wasn't even being funny.
He didn't apologize for it.
No, what? Okay, so
I mean,
then
think about that. If you walked in, management trainee program at Coca-Cola and be like, if I don't have a path to CEO, I don't need to be here.
It was such a learning moment. And one thing I have to say about this podcast, and since we've been taping it, it's an education. Listen, and I don't mean that in the dry sort of education. Yeah. It's like a masterclass in being top tier in business.
Yeah.
The way these people think, the way they approach their willingness to give back. Every single one of them has talked about that.
Yeah.
Has talked about giving back, has talked about like what they're doing for their community, looking out for their own, it's just really.
Yeah. Because you know what? Yeah. And you know what you're tapping into is, listen, we could put out a book with lessons and tips and hacks. We probably will. But what you're really hearing,
I'm writing that down.
That's your next assignment next year. Right? Write a book, a Wocstar book. But here's what you're getting is a mindset, right?
Mindset.
It's the mindset of these people, right? So it wasn't like there's a chapter on like, if I'm not CEO, I'm out of here.
Right.
No, what you just heard was the mindset.
Here was another mindset. Ready? Profits, not paychecks.
Heller.
I was scribbling like a maniac.
So you know where I first really got, so I twisted it. So when I first heard it years ago, Miss Fraser will know who I'm talking about. She said to me, 2 paychecks are always better than 1. And I never understood that.
I don't know what that means.
She was like, yeah, you got this great comfy job on Wall Street. She's like, but that is 1 paycheck. And she said, Gayle, 2 paychecks.
So revenue streams.
But she said 2 paychecks are always better than 1. And I was like,
that's
wow.
hustle.
Wow.
Yeah.
Monique Fraser said that to me. I'll never forget it. As I've progressed in my career and my journey and my personal investing and now my investing on behalf of others, my limited partners, now it's like profit versus paycheck. Profit so and percentage of what we're building is always better than a paycheck.
Yeah.
And I want that for my team. I want that for you. I want that for the interns. Everyone that's a Wocstar, I want that for us all. I want us to have, but that's mindset, right?
That's mindset.
That goes back to mindset.
And then he talked about like the people who championed him. And you guys were talking about mentorship versus champion and the people who pull up. Amazing.
Yeah.
Just amazing.
Yeah. I mean, and
who's champion for you, would you say?
I'll say his name, this guy, Kevin McQuilkin.
Mm-hmm.
I was in mergers and acquisitions at Chase, which is now JP Morgan. And he was a champion for me. I know the reason why I got to vice president was because of him. Because the deals he allowed me to be on that could have gone to someone else, he made sure that I was on those deals and worked on those mergers. And then I know, was in that room pounding the table when the promotion conversations came up.
Yeah.
And what Benny talked about was he allowed me to take credit for the stuff I did.
Yeah.
Kevin was comfortable enough in his self and his career that he didn't have to grab all the other, good stuff that was happening around him.
Yeah.
He was comfortable to say, she did that. She did that.
I love that.
Yeah. I should send him this podcast.
You should.
Or maybe I should just call him and thank him again.
You should.
Because I wonder if you know what? I wonder if he really knows.
He might not know.
That he was such an influence on.
I don't think a lot of people know when they actually make such an impression on another person. Especially if they're doing it out of just who they are. As opposed to for some sort of credit for it. That's right. I told you the story. One of the people that I think of when I think of who's pulled me up, I was an intern. I told you this story. I was an intern at a television show called The Current Affair early in my career, and I was
I used to watch Current Affair.
Yeah, yeah, and I was an intern, and I worked very closely with the director, and she was a woman, and she was a woman of color, and that's really unusual in general.
I remember this
specifically,
now. Yeah.
And I was up for a PA job, and somebody else got it.
What's a PA job?
Production assistant job, and somebody else got the job, and I, took the lump, and I was like, well, that's terrible, but okay, and I went to her to say goodbye. And she's like, where are you going? I was like, well, so
as a black woman would say, where are you going?
She's like, well, somebody else got the job. And she's like, hold my coffee, And she went, and I worked really closely with her for all the ins and the opens. I mean, the teases, and I would stay late and cut things. And, I really loved that part of the thing, but I just was doing what I loved. So it didn't matter to me.
Right.
She went into the executive producer's office. When she came out, there was a second PA job, and I got it.
You know what's also beautiful about that?
I've never forgotten that. Yeah.
Yeah. What's also beautiful about that is that she was willing to do that.
Well, that's what y'all were talking about.
So often we may see wrongs, but we don't stand up to right them.
Yeah, and I also really appreciate that it
Like,
wasn't at the cost of somebody
take...
else, right?
That's right.
Yeah.
Oh, yeah. She made room for two.
Yeah.
Which there can be.
There is always more money.
Always room. There's always room for more.
Yeah.
Okay, so you know what? I am going to find a way to get a hold of Kevin McQuilkin. If it's LinkedIn, Facebook, Kevin, there's a thank you and some flowers. I mean, not real flowers, but there is a thank you and a whole host of gratitude because you were that person, that champion.
I'm going to try to find more. I'm going to try to find mine too.
Oh my gosh.
Yeah.
Let's both try and do that and
we'll
each other
put it on
accountable.
social if we do. Yeah.
We'll hold each other accountable.
Mm-hmm.
Yeah. And everybody else who's watching or listening, find someone that made an impact in your life and thank them. And if you can't find them, do something that would show your gratitude for another person.
And pay it forward.
Try to do
exactly.
Yeah. Show your gratitude by being a blessing to somebody else. That's your homework, Wockstars. Stay fabulous.
Thanks for hanging with us. This podcast was produced by Wocstar Media in New York City at the Podstream Studios. Be sure to follow VCs Off the Record on Apple and Spotify. We're also on Sheconomy, the State of Women podcast platform. Please consider giving us a good review or share it with someone. Let us know what you want us to talk about on our socials and our YouTube channel. You can find us at wockstar.com for all the information.